Central bank digital currencies transforming the future of global finance. Globally, central bank digital currencies, or CBDCs, have drawn a lot of interest as nations work to update their financial systems. 134 nations, representing 98% of the global economy, were investigating or actively creating CBDCs as of January 2025. Countries that have taken the lead in establishing fully functional CBDCs include Jamaica, Nigeria, and the Bahamas. The present state of CBDCs, as well as their advantages, difficulties, and consequences for the global financial system, are examined in this video. Number 6. What are CBDCs? What sets CBDCs apart from cryptocurrencies and other online payment methods? The central bank issues and regulates digital versions of a nation's fiat currency, known as CBDCs. CBDCs are centralized digital currencies designed to supplement current electronic payment systems and actual currency, unlike cryptocurrencies, which are decentralized. Increasing financial inclusion by giving the unbanked digital access is one of CBDC's main goals. Boosting payment systems' effectiveness and security, assisting governments in putting into practice monetary policies that are more successful. Number 5. The development of CBDCs worldwide. In recent years, there has been a greater push for CBDCs. There are now 44 nations piloting CBDCs, up from 36 the year before, according to the Atlantic Council's CBDC tracker. Technological developments, the emergence of private cryptocurrencies, and the need to updating financial institutions to meet the demands of the digital era are the main forces behind these initiatives. Why are nations investigating CBDCs? Increasing the effectiveness of payments. Compared to conventional payment methods, CBDCs offer quicker and less expensive transactions, both locally and abroad. Inclusion of finances. There are still millions of unbanked individuals in the world. These people may be able to use digital wallets to obtain financial services via CBDCs. Thwarting cryptocurrency. The possible dangers of private cryptocurrencies, such as regulatory difficulties and financial instability, worry governments. An option supported by the state is offered via CBDCs. Number 4. Case studies nations, pioneering the revolution in CBDC. How has it fared since the Bahamas became the first nation to introduce a CBDC, and why? The Bahamas Sand Dollar. With the Sand Dollar, the Bahamas became the first nation to formally introduce a CBDC in 2020. Addressing the difficulties of delivering financial services across its dispersed islands was the main objective. Results. In isolated places with few actual institutions, the Sand Dollar has made financial access easier. Difficulties. Although the Sand Dollar was a pioneer, it only makes about 1% of all cash in use. Due to poor merchant acceptance and minimal consumer awareness, adoption rates have decreased. With the goal of increasing adoption rates among individuals and companies, the Central Bank of the Bahamas has ordered commercial banks to make the Sand Dollar accessible in order to address these problems. Nigeria. Naira. In October 2021, Nigeria introduced the Naira, its CBDC. Nigeria, the biggest economy in Africa, sought to close the gap in financial inclusion and promote smooth transactions by using the Naira. Results. Targeting the nation's unbanked population, the Naira is a tool for both local and international payments. Difficulties. The main reasons for the slower adoption than expected have been a lack of trust and inadequate awareness of the advantages of the Naira. Its expansion has also been hampered by a lack of merchant and customer integration. To promote the broad usage of the Naira, the Nigerian government keeps funding infrastructure development and public awareness initiatives. JAMDEX, Jamaica. The introduction of Jamaica's CBDC, sometimes referred to as JAMDEX, aimed to update the country's financial system and increase public accessibility. Results. The goal of JAMDEX is to provide a simple, smartphone accessible, cashless substitute. Challenges. Due to a lack of understanding, public and merchant participation is still minimal. The adoption of JAM-DEX has been hindered by small business resistance and a lack of incentives for retailers. There are initiatives in place to educate the public about the advantages of JAM-DEX and incorporate it into current financial networks. Number 3. Difficulties in implementing CBDC. Despite the enormous promise of CBDCs, there are challenges in putting them into practice. Adoption difficulties. Public knowledge. Many people don't know what CBDCs are or are dubious about their advantages. Acceptance by merchants. Without explicit incentives or assurances of advantages, merchants are reluctant to embrace CBDCs. Security and privacy issues. Users are concerned about the handling of their financial data, particularly in centrally managed systems. To stop fraud and hacking, strong cybersecurity measures are essential. Connectivity with current systems. A CBDC has to be able to easily interact with the financial platforms, payment networks, and banking systems that are in place in order to be successful. Commercial banks, technological companies, and central banks must work closely together to accomplish this. Legal and regulatory barriers. To control the issue and use of CBDCs, governments must set up explicit legal frameworks. It is crucial to abide by anti-money laundering (AML) and counter-terrorism funding (CTF) laws. Number 2. There will be important developments in 2025. What effects will the SWIFT network experiments have on the compatibility of conventional currencies and CBDCs? In 2025, we anticipate many significant breakthroughs in the use of CBDC. Trial of SWIFT network. In order to investigate how CBDCs can function alongside conventional currencies, financial institutions from North America, Europe, and Asia will participate in live experiments on the SWIFT network. Use the infrastructure that is already in place to facilitate cross-border transactions. The purpose of these trials is to illustrate CBDC's interoperability and scalability in a global financial setting. Central Bank of Europe, ECB, Euro Digital. With plans for a multi-year trial program, the ECB's Digital Euro initiative is moving forward. The purpose of the digital euro is to supplement current payment systems, attend to the evolving demands of companies and customers in Europe. The ECB is committed to making sure the digital euro is safe, simple to use, and part of the larger financial system. Number 1. Outlook for the future. The emergence of CBDCs signifies a substantial change in the international financial system. Even while early adopters like the Bahamas, Nigeria, and Jamaica have had difficulties, other nations may learn a lot from their experiences. Knowledge acquired. The key is education campaigns for public awareness are crucial for fostering understanding and trust. Merchant incentives. Businesses may increase adoption rates by providing incentives. Cooperation is essential to solve technological and regulatory issues. Governments, banks, and IT companies must cooperate. Possible advantages. Financial inclusion. Millions of unbanked people, especially in developing nations, may be empowered by CBDCs. Resilient payment systems. CBDCs have the potential to increase payment networks' efficiency and resilience. Enhanced monetary policy. Governments can implement direct stimulus payments and other more focused monetary policies through CBDCs. In conclusion, Central Bank Digital Currencies (CBDCs) could change the global financial system, making it safer, more efficient, and more open to everyone. Countries like the Bahamas, Nigeria, and Jamaica have had trouble adopting CBDCs, but their struggles teach us a lot about how hard it is to put CBDCs into practice. As more countries start using CBDCs, the future of money is about to change in a big way. But technological, legal, and adoption problems need to be fixed before CBDCs can fully live up to their potential. If CBDCs keep coming up with new ideas and working together, they could have a big impact on future financial systems. Like, share, and subscribe for more.